Okay, it's time to talk savings for February 2025. In a moment, I will take you through the top paying rates right now so you can get the highest amount of returns, highest amount of interest on your savings. But before that, I want to quickly take you through a few bits of news, some rate cuts, some other changes, some new product features that are worth knowing about. So first of all, very quickly, just touch on the fact that we are going to have a Bank of England base rate meeting next week on the 5th of February, Thursday, the 5th of February. Because of the latest inflation figures, which showed a slight increase of 3.4%, most people are now saying we aren't going to see any change to the base rate next week. Of course, it could be happening. Some of these things always change. Things can happen at any moment that change that decision, but it's looking less likely it's going to happen and more likely that a rate cut will happen in March instead, bringing us down from the current rate of 3.75% to 3.5%, and potentially another one of those at some point in 2026, bringing us down to 3.25%. Of course, these things change all the time if you've been following the updates that I give on base rates, and I will do another one of those on the YouTube channel and on the website next week after that Bank of England Monetary Policy Committee meeting to tell you exactly what has happened. That things change month to month to month, or every 6 weeks they do this, things always change. But I just want to give you a heads up on that there, because you might be thinking, well, if a cut's coming along, what will that mean to interest rates? Or if there is no cut, does that mean things are going to stay where they are? And sadly, it's not quite as simple as that. Yes, obviously, some of those easy access accounts are really popular ones, like ones from Chase and Train 212 are tracker rates now. So they would automatically go down if there was a base rate cut, which means they won't change if there isn't. But many of the others are already pricing in this change. Doesn't matter if it happens in February or happens in March or happens in April, whatever it is, they're still expecting it to happen. So they're pricing that in. So we actually have already seen a huge number of those rates available fall down. The top rates across many accounts are not where they were a month ago or 2 months ago. And in fact, there's an even bigger gap between those top rates and some of the ones below that. So we are absolutely still in this period where rates are going down. So making it even more important, you get the best possible rate you can for your money. And that may well mean locking your money away for longer times, because they are, again, all falling down and getting to the place where would your money be better off elsewhere? Again, we'll go through the top accounts in a moment. I want to quickly talk to you about Financial Services Compensation Scheme. The update I gave you in December told you about that increase from £85,000 per financial institution to £120,000, which was good news. But you'll notice there, remember, financial institution, that's a really important thing to note there, because sometimes you get banks which have more than one brand, and sometimes they have their separate protection. So you're covered for that full 120k with both banks. Sometimes it's combined. And it's important to note here that if you're a Nationwide or Virgin Money customer, they currently operate with separate financial services compensation scheme protection as separate institutions. But obviously, Nationwide bought Virgin Money last year. And from the 2nd of April, they are going to become a single financial institution when it comes to the FSCS protection. Now, most of you, that's not going to be a problem. But if you do cumulatively have more than £120,000 in Nationwide accounts and Virgin Money accounts, if the Building Society was to go under and those brands were to disappear, you'd only be protected to that 120k, which again, is a lot of money. But if you do happen to have a lot of money in both of them, then it'd probably be prudent to move some of that cash to a different bank or Building Society. A couple of quick cuts to share with you here. First one is the digital regular saver from NatWest and RBS. Now, I'm a big fan of this account. You can get it with any current account you have with either bank. In fact, if you have a current account with both banks, you can have a digital regular saver with both as well. Potentially you can have two of these. Now, until just recently, it was paying 5.5%, which was down from a high of 6.17%, but was still pretty decent. That's now fallen to 5.25%, which is still not bad. And it's not a reason to get rid of the account, because although, as we'll get to later on, there are higher paying regular savers out there, and they might be better alternatives for new money you're putting into those accounts. If you already have money in a NatWest or RBS digital regular saver, I would certainly be keeping it there, because unlike other regular savers, which tend to sort of finish after 12 months, sometimes they're a little bit shorter than that, but generally after 12 months, all your money comes out, the money you put in and the interest, and you're starting again from scratch. This one carries on, continues to give you that high rate of interest up to a limit of a balance you can earn, which is £5,000. Sorry, you can save there £5,000. So that, as we've seen with our easy access accounts, are they're cutting their rates. To be able to get 5.25% on balances up to £5,000 is great for those kind of money you've already put aside. So something to bear in mind there with those accounts. I'll take you through the higher paying ones in a moment. Another cut, tell you about, and I mean, obviously I could tell you about every single cut and we'll be here for hours and days potentially, but I'll tell you explicitly about this one because it used to be a Best Buy that I would recommend to all of you, and I'm sure many of you have got this, even though there have been a raft of cuts over the last 12 months, and each time it's happened, I've told you, like, shift your money out of this. And it's the Barclays Rainy Day Saver because they are cutting the rates again on this account. From the 11th of March, you'll get 3.98% on balance up to 5K, down from the current 4.13%. Now, if you are a Barclays Premier current account customer, you've got this 3.98. Maybe it's all right. Maybe it's not bad compared to other rates you're going to get elsewhere. But if the way you're accessing this is via Barclays Blue Rewards, you're paying £5 a month to get it. And that really, really cuts down the effective rate. So I would not be, for most people, keeping your money in there, particularly because you can still get higher paying easy access accounts. It's getting more sort of finer, the margin between what the Blue Rewards and the Rainy Day Saver you can get there. But again, I still think you're better off elsewhere. But it's worth talking about it because it has been a very popular account for people. Now, before we get on to those Best Buys, I've got a trio of kind of savings challenges and extra savings hacks to share with you. One of them is Snoop. You might know this is kind of an app which aggregates your accounts and helps you budget. It's not too bad, not a bad one to have. They've just added the ability to auto save roundups from your connected accounts. And you can do that at, you know how roundups work by now, I'm sure. You spend £2.90, then 10 pence is the amount that we round up to £3. That 10 pence will be moved into a separate savings account. And you can boost that, you can double it, triple it, 5 times, 10 times the amount that goes across. And although I think it's better to manually know how much you're going to save and put that across every month to a different savings account, these can be great ways to subtly in the background just move up a little bit more money into a separate account. Now, this one goes into an easy access account paying 4%, which again, isn't bad. Not a bad account by any means. You can beat it in easy access accounts, but it's hard to beat it in roundups. A couple of them do. Chase will give you 5%. That NatWest RBS account I just mentioned just now, that 5.25% paying digital regular saver, roundups go into that as well. So there are a couple of accounts where if you really love roundups, you can get more. But this might be a good way to combine it with other spending at different accounts where you don't get access to such a high paying interest rate on the money you move across. It's also worth noting, if you don't already have Snoop, we have got a link over on becleverwithyourcash.com, which will give you a free £5 Amazon voucher when you first sign up and connect an Amazon account. So that's a nice little extra to get on top. Talking savings challenges, so there are 3 of these to share with you. The next one relates to Monzo. Now, if you are a Monzo customer on the Max, Perks, or Extra tiers, which are all paid for, then you can, at any time throughout the year, activate the one-piece savings challenge within the app. However, if you're on a different Monzo account, you've only got until the 31st of January to do this. There is a kind of workaround after that using something called if this then that, so you could still do this. But if you want to do it, the official one with Monzo, you've only got a short amount of time to activate it. Now, if you do this, it essentially works that on day 1, 1p is moved from your Monzo account into a separate savings pot. On day 2, 2 pence. On day 3, 3 pence. It continues throughout the year. So you get to about 670 quid, just under that after 365 days. So again, another nice way for money to gradually build up throughout the year. Although obviously you might notice it more when you get to the 12 months time when, £2.50 up to £3.65 are going out every single day. If you do it before the 31st of January as well, you'll also be entered into a prize draw that if you get the full amount after 12 months is worth £10,000. Obviously, there's only one of those, so the chance you're winning are low. But, if you're going to do it anyway, why not do it while that's running? And those paid Monzo customers will also be entered into monthly £100 prize draws as well. So if you are going to do that, you like the idea of this, I have got a whole article and I think an older video on the YouTube channel looking at savings challenges and how they work. For a bit more information. Now, obviously, it's a good time to go ahead. And the final one of these is not auto savings, but it is a feature from Starling that is trying to encourage you to save small amounts. All of these are small amounts, which over time will add up. But this one, makes you transfer the money yourself. I'm not entirely convinced on it. It's called the last digit widget. Effectively, you open up a new space, the last digit widget space, and the challenge is more on you, which is not necessarily a bad thing, because I think when stuff's completely automated, you don't necessarily make those conscious decisions to save more. I'm just not convinced it's worth the effort to move these small amounts yourself every single day. Because the idea is you would look at each transaction and the last digit, let's say it was £4.93, you would move 3 pence from your account into this different separate pot. Again, it's there. It's a new thing. If you like the idea of it, give it a go. Pros and cons to it. Personally, I wouldn't bother. Okay, let's have a look at the top paying savings accounts for February 2026. Remember, these rates will change. They'll change daily. They can change more than once in a day. Sometimes they certainly change in the time from me telling you about them now and the next time I do an update in a month's time. So if you want a most up-to-date version of this, plus you want more options, I'm just going to tell you the top levels for each type of account to give you an indication of what's available out there. But if you want more choice, more options, which might better suit you, make sure you head over to becleverwithyourcash.com/savings. Over there, the team, so Zoe and James at the moment, they're updating these tables every single day, making sure all those options are available to you. So let's start with easy access savings accounts. Now, there are a couple here which will have a limit to them in a certain way, but you'll get a higher rate on them. The top one here, as it has been for months and months and months, is still that Santander Edge Saver. That is paying 6%. After the year, the rate drops down, but you can close it down and open it again at whatever the top rate they're offering is in a year's time. Now, the maximum amount of balance here you can earn this interest on is £4,000, which is a lot of money. But obviously, it does mean if you've got more than that you want to save, then you probably have to have another account for that additional money you want in easy access. Incidentally, there is right now a £225 switching offer for Santander Edge account and other Santander accounts as well. You have to go via the link on Be Clever with your cash for that extra 25 quid. If you go directly to Santander, it's just £200. But if you're thinking of opening up that account, you'll need to do that at least to get that Edge Saver. The Edge Saver does require an Edge current account. The Nationwide Flex Direct current account also pays 5% for 12 months, but only on balances of up to £1,500, only for new customers. So yes, it's there, but I personally wouldn't be going for it. And if you are new to Chase, you've not had an account with them before, you can get 4.5% for 12 months. Again, only new customers. That is a tracker rate, so it will drop with the Bank of England base rate if it does fall. But other than that, it is the highest paying kind of current account and easy access linked account right now. If you don't want an account that is linked to a current account, you want to open up an account, whatever you want, then going via Kahoot will get you 5% on balances of up to £3,000. Again, a smaller amount, but it is still 5% a really good rate to get right now. If you go via Top Cashback, you can get £25 cashback as well. Then we jump down a fair amount. Mansfield Building Society have a triple access account. So that means you can only access your money 3 times a year, offering 4.25%. However, this is only by post or in branch access. So not great for those of you who want to use an app, but good for you if you don't like using online banking. If you want one that is available on an app, then Manchester Building Society 4.15% or Shawbrook 4.13%. So say big drops down from those higher amounts, those 5 and 6%, but obviously you can have larger amounts saved in those accounts if you want to. ISAs are still having a bit of a battle right now. They're down from where they were, but we've definitely seen Train 212 in particular increasing its rates over the last few days a number of times. And I'm sure we'll see maybe a bit more of this as we get into ISA season. So these top 2 are for new customers only. First one is eToro, 4.49%. This is not a true cash ISA because the money is actually invested, but it acts as if it's cash and the risk is very low. If you want a more normal cash ISA, a proper cash ISA, then Train 212 is currently offering 4.4%. Again, both of those are for new customers. There are a few others out there with decent rates for new customers, but if you just want an account with no bonuses and none of that faff, then Atom is offering 4.25%. Remember, becleverwithyourcash.com/savings will give you more of those alternative options. Notice accounts are a kind of good halfway point between easy access and fixed. Basically, the idea is you have to give them notice to get your money, and sometimes you can get a kind of slightly better rate. At the moment, they aren't too bad. 3 months with Oak North, 4.23%. 4 months notice, again with Oak North, 4.5%. Or 6 months notice with Earl Shilton, 4.5%. So you can see you're getting slightly higher rates than many of those easy access accounts. But of course, you might have to wait to get that money for a fair few months. Let's look now at fixed accounts, and we'll start with normal accounts, non-ISA accounts. The top 6-month fix is currently Al Rayyan via Meteor. That's one of those savings marketplaces. So you create an account with Meteor, and then you have access to all the different savings accounts in there. There are a number of them right now at the time of recording this. I wouldn't be surprised if it's a different provider in a day or two. Again, be cleverwithyourcash.com/banks for more options if you don't fancy going via a third party. But that 4.22% with Al Rayyan via Meteor is 6 months. Meteor again, but this time Oak North is the account you'd open via them. For 9 months fix, 4.34%. For a year fix, Ariane via Meteor, again, 4.4%. Or if you don't want to do that, I've just included that here because 1 year is a common way for people to save. My Community Finance, 4.35%. Now, technically, you do need to be a part of a trade union or another kind of member organization to access those accounts. But you can get a £1 co-op membership, which will also get you discounts at the supermarket, which will also qualify for you for that. Best 18-month fix right now, Synergy 4.2%. Best 2-year fix, My Community Finance again, 4.24%. Best 3-year one, Ariane via Meteor, 4.22%. Best 4-year fix is Synergy, 4.25%. And best 5-year fix, Hampshire Trust Bank, 4.31%. Remember, again, often get comments here, people saying to me, why didn't you talk about this one? Why didn't you talk about that one? I'm just giving you the top ones here to give you the indication of the best you can get right now. So fixed ISA accounts, let's go through those quickly as well. Best 12-month fix here is Ariane via Meteor, 4.2%. Best 2-year fix, Ariane again via Meteor, 4.15%. Best 3-year fix, Synergy, 4.15%. Best 4-year fixed ISA, UBL, 3.91%. And best 5-year fix is Tandem with 4.2%. When we look at lifetime ISAs, the top paying one right now is from Plum. That's 3.95%. So way down on where we were just a few months ago. And finally, let's talk about regular savers. I promised you I'd come back to those. The top paying one is still 7.5% from Principality Building Society, but because that's only for 6 months, and I've covered that in a previous update, I don't think it's worth going for that one particularly. The top paying one, though, that is for a year is from Zopa. You need their Biscuit current account to get this. You get 7.1%. That is variable, so it could change in the year. First Direct, 7%. This is fixed. Again, you need their current account to get this, but it does mean that if they do change the rate at any point, but you've already got the account, you're covered. So I wouldn't necessarily wait around too long if you're keen to get this, because as we saw with that NatWest cut, there could well be more cuts coming to regular savers. And finally, also Cooperative Bank account also gives 7% for its current account customers. Again, that one is variable. If you don't want to open a current account, the top regular savers for all, got that Principality Building Society that I mentioned at 7.5%, or you could look at Monmouthshire Building Society at 6%, or Scottish Building Society at 6% as well. More information and more accounts over at becleverwithyourcash.com/savings. My name's Andy Webb. Thanks so much for watching. Check out these videos here for more ways to make the most of your money.